What's up, everybody? Welcome to the Stocks channel. My name is Corey, and today in the stock market we continue to see volatility with the indices continuing to sell off. Is this going to be a full-blown stock market correction? First up, let's take a look at the NASDAQ 100 QQQs ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, today I want to start with the QQQs because this is the last index that has not lost the full bull trend and has not lost critical support. So we really need to find out if the NASDAQ 100 is just lagging behind and it's about to roll over next, and then we will very likely see that full-blown stock market correction. So with today's price action, we saw the QQQs going down 0.28% and closing right on top of our critical support, which is right around 375, and that is going to be our 20 simple moving average. We can see that we're very close to losing the full bull trend if that 5 EMA does cross below the 13 EMA. So as soon as tomorrow, we could lose the bull trend. Now this will be a big deal because we already lost the bull trend in the Dow Jones and the S&P 500, and we are at very critical support levels on the other indices. So if we see all of the indices rolling over, we're very likely going to see a full-blown stock market correction, and we still could go much lower. Keep in mind that the QQQs do have a gap to fill, and the 50 EMA of support is all the way down here at 368. So if we lose 375, we're very likely coming down to 368. And from today's close to that gap fill is about another 2% drop. So there is more downside possible if we lose critical support. That's why I want to focus our attention on the QQQs tonight. So the first thing to note is that we did close right on top of critical support, and we do have support just below right around 374, and we'll get into why that's going to be support when we switch over to the 1 hour chart. So going into tomorrow's trading session, the bulls need to start buying at this support level and get a positive bounce off this level to maintain the bull trend. Next, we'll need a price action breakout above 382 to form a new all-time high, and that will confirm we're going to the next price target at 388. Anything else is just a lower high, and it's just a downtrend from there because lower highs and lower lows are exactly what you expect to see in a downtrend. So right now the QQQs are on a 5-day losing streak, and as you can tell, we have gone lower on the QQQs for 5 days in a row. Normally this turns into a dead cat, and typically a dead cat bounce will form a lower high. So watch the resistance trend line because any high that's a lower high and we get rejected at resistance means we will likely form a lower low next. Remember, bear markets are lower highs and lower lows, and bull markets are higher highs and higher lows. So for the time being, we have to assume this is still a higher high, higher low situation until we see something changing and we take out a low. So the low I want you to watch below 374 is right around 372. If we take out that low, it will look a lot more bearish, and as you know, we're very likely going to close that gap at 368 anyway. So your early warning sign on the QQQs will be a price action close below 375, and below that, we're very likely going to break down below 372 and close the gap at 368. So watch for those critical support levels, and as you can tell, we still are seeing red days on high volume. Now the good news with the volume is we did not see an increase of volume today. So the selling is slowly but surely starting to slow down, and that does typically mean we could see a bounce as soon as tomorrow if we don't see any more high volume selling. If we lose critical support, we could see the floor fall out and we could see an increase in volume on selling and we could get that elevator down. Right now, it still looks like the stock market is taking the staircase lower and we don't really see the elevator down just yet. That's still a possibility, but because we are starting to get into this dead cat bounce territory, it's not likely coming at this time. So don't forget, in the bearish situation, even if we get a bounce, we could still form a lower high and then come back down to form a lower low. This is still going to be a bearish situation because obviously this lower low will be very painful and it could take us all the way out to the end of the month. So don't let any bounce trick you. We still need to break out and close above about 382 to confirm that this is the real deal bounce and we are indeed going to 388. Another possibility is that we do get that bounce and we do get the confirmation breakout, and then this would be a buy the dip situation where we could come back down to support and then get up there to our price target at 388. So either way, this is why I always tell you price action is king, because you don't know exactly how this is going to play out, so you need to watch how the price action behaves. If we lose critical support, we could just continue to go lower and we could attempt to bounce off of the 50 EMA before making that lower high. So all of these scenarios are possible and you don't know exactly what's going to happen, so you need to watch these critical support levels and follow the price action. If you have any biases in this market, you're automatically going to be a less successful trader, so you need to check your biases at the door and you need to stay objective and you need to let the price action do all the talking. So watch for this critical support going into tomorrow to see if we're going to start seeing that bounce. And remember that just because we bounce doesn't guarantee that we have to go back into a bull trend. We will not lose the bull trend, so the bias will still be bullish. but you still do need to watch these critical resistance levels above. So look for that going into tomorrow. And now I want to jump over to a 1 hour chart, and I do want to show you something that we did see near the close. We saw a green candle on increasing volume, so that is bullish that we did start to see some buyers stepping in, or it possibly could have been a mixture of short covering. But the good news is that we did not form a lower low on the 1 hour chart. So there is going to be a strong support level right around 374.45. So watch that level because it does look like it could be a potential double bottom. To confirm the double bottom, we need to come up here and take out the neckline, and then that will confirm that we could get up there to 382 yet again. So look for a breakout above about 378 if we do get this confirmation double bottom breakout from the support level at 374.45. This would be a bullish price action development because a double bottom means we could break the neckline and go up to our all-time highs yet again. So look for that as soon as tomorrow. And if we don't hold this support level, we're obviously coming down to lower prices, and you do want to watch those lower support levels. So that'll give you something to watch for in the price action, and obviously stay objective and make sure if we break below support, you don't get overly bullish because that will be a bearish breakdown. If we hold support, you want to start assuming we're going up for this neckline, and if we get rejected at that neckline, we could get into a choppy trading range, and eventually we will get a breakout to the upside, or we will get a breakout to the downside. So look for all of these scenarios and know your ranges from resistance to support because that's exactly how you're going to navigate a volatile market. Bears make money, bulls make money, and pigs get slaughtered. If you're shorting this market at resistance, you're still likely making money. And if you're buying at support, you're obviously still likely making money. It's if you get overly biased in either direction that you're gonna start losing on your trades, and things could spiral out of control if the market goes against you, so make sure you don't have any biases during this time. Next up is the S&P 500 SPY ETF, and we did see SPY breaking below that support trend line and closing the gap. So there is no more gap on SPY, and the next critical support level is down here at 441. There's always the possibility that you do get a false breakdown, so we could have closed the gap, and we did see that bounce as support, so we could still go higher from here. However, we're so close to the 50 EMA, it's very likely we're going to come down and tag it, so look for a strong support level right around 441. Remember, last time we came near the 50 EMA, we did not touch it as support, but the Bollinger Bands were not expanding far enough to allow for that price action, and this time the Bollinger Bands are expanding and the price action does encompass the 50 EMA. So with the wide Bollinger Bands, expect plenty of volatility and make sure you're watching these critical support levels. To the upside, we still have resistance at 446, 448, and 449, and we really need to start breaking back out above about 451 to see SPY going back into a bull market. We lost the bull trend, and if I switch SPY over to a 1 hour chart, you can easily see this is still a falling knife scenario. We have lower highs and lower lows, so there's nothing on this chart that tells us that SPY is going higher. It's quite the opposite, and we see a very strong downtrend on the 1 hour chart. So the 1 hour chart is telling us to expect lower prices, and on the daily chart, we can see the lower price would be that support level at 441. So like I keep telling you, follow the price action and let the price action do all the talking. You don't have a bull trend or a bear trend on the daily chart for SPY, so you don't have any biases in either direction. You just need to watch critical support and critical resistance and take each and every trade that the price action gives you. Don't force any trades and make sure you're staying disciplined. And if you have a bias, you're more than likely going to lose money in this market because the market could go either direction and the price action is going to dictate that. On the Dow Jones, we were down 0.81% today, and we see the Dow Jones coming back down to that support level and gap close at 346. So this gap is now closed, and as you can tell, SPY and the Dow Jones did close their gaps today. Overall, that could be a bullish development because typically gaps do get filled, and now that we did fill those gaps to the downside, it is possible we continue to go higher. However, like I told you, the triple Qs could be lagging behind and they still do have a gap at 368. So on the Dow Jones, this is definitely starting to look like a dead cat. And as you can see, the volume is starting to dry up as the sellers get tired and exhausted because the Dow Jones is already down pretty significantly from the top, which was back here on August 16th. So this is now the fourth day in a row below the 50 EMA, and we are starting to develop some bearish trending. On the Dow Jones, look for support at 346, 344.7, and 341.7. To the upside, we have resistance at 348, 350, and 351, and our 20 simple moving average is at 352. We really need to see the Dow Jones getting back above 352 to start looking bullish yet again, and this is still just a dead cat bounce until proven otherwise. So any bounces from here are just dead cat bounces. So you need to see the price action breaking back above at least 350 to start seeing the market looking bullish in the Dow. On the Russell 2000, we were down 1.27% today, and we did see the Russell losing that critical support level at 222, and we did come back down to the next critical support level at 219. If we lose the $219 support level, look for the gap close at 216, and below that we have support right around 215 and 212. To the upside, we'll now have strong resistance at 222 and 224, and we need to see price action back above 224 to start regaining the bull trend. Right now, the Russell 2000 is still very choppy, stuck in this sideways trading range, and it really is just range-bound trading between support and resistance with no trend for the bears or the bulls. On the Arkk ETF, we were down over 1% today, and we see Arkk rolling over because we did lose that critical support level yesterday below 120. So this is the second day in a row trading below critical support, and we did close the gap yesterday, and we still could have support down here right around 115.5. If we close below 115, look for support at 113.8 and 112.7. Our upside resistance levels will be 120 and 123, and we really need to start breaking back above about 121 to start reversing the bearish trending. If we continue to head lower, we will get the full bear trend, and we will see Arkk going into a bear market. On the VIX, we really just see a big doji candle because we saw volatility going in both directions today. We do have the full bull trend on the VIX, and as you already know, if we see the VIX breaking and closing above 21, and we see the VIX starting to spike above 23, we'll know the stock market correction is officially here. Right now, the VIX is still in that range that tells us this is likely just a stock market pullback. We need to see the VIX breaking out above 21 to see the volatility that'll take for a full-blown correction. As long as the VIX is below 20, expect to see the selling starting to die down, and we could even start to bounce from here as the VIX gets crushed back down towards 16. So the VIX trading below 18.2 will be a bullish development, and that could tell us to look for brand new all-time highs. And if the VIX breaks out above 21 and closes above 23, you want to look for more downside as we continue into a stock market correction. On Bitcoin, we're currently up about 4%, and we do see Bitcoin holding that critical support level at 45,000. This could be a bullish sign that the rest of the stock market is getting ready to bounce as well, because I do think Bitcoin is a great measurement of how much risk on investors are taking. If Bitcoin is holding support and going higher, that could tell us that the stock market is likely to start bouncing as well. We're going up on some nice volume and we're holding above critical support, so that is always going to be a bullish indication when we see price action holding above a strong support level. We need to see Bitcoin breaking back above 48,000 and closing above 53,000 to start heading back to new all-time highs. Watch the critical support below at 45,000, 43,000, and 40,500. Below 40,500, we'll have strong support at 37,000, but it will start to look like Bitcoin is rolling over, and it could mean we're coming back down to 30,000. But right now, Bitcoin does not look like it's rolling over because critical support is holding up, and it could be getting ready to go back into a bull market once it breaks back out above 48,000. On Amazon, we were down about 0.25%, and we see Amazon holding right up above the support trend line right around 3440. The strong support level is still 3415, 3400, and 3380, and if we break below the 20-symbol moving average, we could come back down to 3311. Amazon still has the gap to fill at 3580, but it was due for a pullback, and it could be getting ready to close that gap next. We need to break back above resistance at 3500 and 3552 to fully close that gap at 3580. If we continue to run higher, look for resistance at 3700 and 3760. On Tesla stock, we were up 0.2% today, and we still see Tesla looking bullish. We have the full bull trend in price action above support at 732, and we need to break out above 765 to start running to our next price target at $800. If we break below support at 732, look for strong support at 720 and 714.5, and the 50 EMA right around 702. Price action needs to stay above 692 to remain bullish, and if we close below 692, we could see Tesla rolling over. Right now, Tesla still looks very bullish, and the bull trend is very strong, so I don't expect to see Tesla rolling over anytime soon. On Apple stock, we were down about 1% today, and we do see Apple closing below our support trend line, which was right around 148.6. Intraday, we tested the 50 EMA as support right around 147, and so far we do see a bounce off that level. We did lose the full bull trend, and we did hit our price target at 157, so it is possible Apple is going through that correction that we could possibly be seeing. There's no guarantee we had to go higher than 157, so there's no reason you should be looking above that level at this time. We need to break back above about 151 to start regaining the bull trend, and if we do see price action breaking out above 157, then the next price target above will be 162. There's no guarantees we're going to 162, so don't even look at that level unless we break above 157. If we break below 147, we need to hold up above 145, or we could come down to close the gap at 137. On the financial sector, we were down 1.34% today, and we did get price action closing below the 50 EMA, and it's very likely we're coming back down here to close this gap below. We don't have a bull trend, and it could be possible that we double topped if we break below the neckline, so look for that price action and that gap close below. The industrial sector was down 1.2% today, and it's still looking very bearish. Price actions below all the moving averages, and we're very close to having the full bear trend, and this is obviously bad news for the S&P 500 and the Dow Jones. The healthcare sector was flat for the day, still closing on top of the 50 EMA, but we are starting to see the Bollinger Bands expand, which does mean the healthcare sector could break below support and continue to trend lower. There's no longer a bull trend, and we could be breaking below critical support at any moment. It's also possible we bounce off of support, so look for that price action as well. The energy sector was down 1.46% today, but we're back above 3 of our 4 moving averages, and we could be seeing the energy sector attempting to break back above the 50 EMA. Look for the positive bullish price action above the 50 EMA, or the bearish price action breakdown below the 20 simple moving average. So jumping back over to the S&P 500, it definitely looks like the stock market could be rolling over, and we're about to see a full-blown stock market correction. Watch the NASDAQ 100 triple Qs to let you know if that's going to happen, because if we're going to see a full-blown stock market correction, we're also going to lose the bull trend in the triple Qs. So all eyes on the tech sector and all eyes on the NASDAQ 100 as we go into the rest of the week, because we really need to see the price action bouncing off support to maintain the bull trend in the tech sector. That could be just enough to keep the S&P 500 afloat as we try to rebuild the bullish trends. If we lose critical support and we see the NASDAQ 100 rolling over, you're more than likely going to see the spike in the VIX that I've been telling you about, so look for that price action as well. Don't forget, I also have my own trade alert service that only trades TQQQs, and it does very well in volatile markets like we're currently in. I'm currently running a 50% off promotion code, so now could be the best time to try out BANC trade alerts. You can find out all of the details and how to join by clicking on the links in the description of the video. I also have the Stocks channel Discord where I do intraday updates and analysis to help you navigate this volatile market and stay on the right side of the trade. If you're interested in joining the Stocks channel trading Discord community, you can find out how to join by clicking on the link in the description. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.